Now, Canadian miner Orla Mining is gearing up for a potential doubling of its annual production after acquiring Newmont's Musselwhite gold mine for $850 million. The acquisition, expected to close early next year, will see Orla shift from a single asset operator to a major multi-asset player in the mining sector. Well, Orla Mining CEO Jason Simpson joins me now for more on this deal. Jason, thanks very much indeed for your time.
Thanks for having me, Devin.
So 2 weeks since you made the acquisition announcement, Jason, I mean, the share price has had some favorable momentum as I look at it. Of course, it is in a high gold price environment as well. What's the general stakeholder response as you see it since you made the announcement?
I can tell you that we have been tremendously pleased with the response to the announcement, and that would extend clearly through our shareholders and the reaction of the share price, but also the stakeholders, both around the mine and at the mine, including the employees. It's been unanimously positive, and we're grateful for that. We have a lot of work to do, as you'd appreciate, but we look forward to working with all those stakeholders to create value for everybody.
Well, we're talking off camera about your visits to Musselwhite, both pre-deal and in recent times. You would have seen on the ground a strong community partnership and workforce relations established by Newmont. What's the plan to maintain that, Jason?
Yeah, thank you for the question. What I would say is that was originally established by Goldcorp, if you remember, and our chairman of Orla Mining is Chuck Jeunesse, who was the CEO of Goldcorp at the time. So our understanding of the asset and the important relationships that you describe is long-standing. Chuck had a very affectionate remembrance of his time at Musselwhite and encouraged the Orla Mining management team to consider this asset in our corporate development process. And so we did, and that relationship that you described generated from the Goldcorp days, continued very responsibly by Newmont, is going to be an essential part of our work going forward. I can tell you that a lot of the Orla management team has experience working with stakeholders that you describe, and we look forward to continuing the relationship and entering new conversations about how not only can we continue the benefits that the mine has produced over 28 years, but in fact improve them and extend the mine life would be our ambition.
How are you paying for this? You mentioned at the time of the deal, when you made the announcement, that the high gold price environment is in that financing equation. I find that quite interesting. Mm-hmm. And then, of course, you have those syndicated lenders there as well. Just break down that for me.
Yeah, Devin, I think part of the reason we've had such a good response to the transaction is how we've structured paying for the transaction. First, I always say that I think Newmont ran a very comprehensive process, but they were very fair and responsible with us, and we seem to have achieved a purchase price that's a win for both of our respective shareholders, Newmont and ours. And the way we structured the transaction is, as you described, taking advantage of the gold price. I'll talk a bit about that. Also relying upon the banks that have supported Camino Rojo in our work in Mexico, and they have continued their support through this transaction. And finally, going back to some of our cornerstone shareholders and utilizing them to essentially achieve this entire transaction of $850 million without any upfront equity dilution. So if I could just break apart quickly those 3 points, we are in a gold price environment that that we have never seen before, and because of that, we were able to craft a portion of this transaction through a gold prepay, essentially taking advantage of the over $2,800 an ounce gold forward curve. And the difference in that curve versus what we all use for our planning, a number closer to $2,100 gold. And so that gap gives us an opportunity to use some of that higher price to pay for this asset. So $350 million worth of the deal was done that way. $250 million of it is through those syndicate of lenders that I described have been supporting Orla throughout. And then finally, a tactic that is not new for Orla, because it's actually how we paid for the construction of the mine in Mexico, is to lean on our cornerstone shareholders' desire to own more of the business, their desire to support our growth. And in this case, Pierre Lassonde and Prem Watsa are there for $200 million to finalize the upfront cash component in a way that I think is helpful, because their perspective is not only is this the right asset for Orla and its growth, but also if they're successful, they'll be able to convert that $200 million investment into equity and become larger owners of the company. We think that's a huge endorsement of their confidence in this transaction and the company as a whole. And that's how we paid for it.
Mm. Well, interesting indeed. The geography of your operations, also another interesting point here. You would be producing in Canada for the first time. Just talk to me about the broader growth strategy, because how does that link or align itself with the operations in US and Mexico, and of course this latest move?
Yeah, so it's fair to say that many of us miners certainly would have a desire to have an asset in Canada. They do come at a higher cost, to be sure, but there's a reason for that. The stability of Canada, the long mining history. Canada, certainly as a Canadian, is a place we would all like to have an asset. And in this case, we were able to find the right asset to fit Orla's strategy. But although Canada is new to Orla, it is not Canadian mines new to Orla. It's not new to a lot of the management team. Our chief operating officer built Young-Davidson mine, spent many years in Northern Ontario, and is a graduate of Laurentian University out of Sudbury. I personally lived in Sudbury for 15 years and was underground in many of the mines with Inco and Falconbridge over the years. So as a mining engineer and he as a metallurgical engineer, started our careers in the underground mines of Northern Ontario. So we're happy to return there. And of course, to your point, Devin, you know, the new portfolio of Orla, which is Canada, United States, and Mexico, really gives us that North American focus, multi-operation production, and will, with the construction of our asset in the United States, take us to 500,000 ounces a year at industry-leading costs, and that is a gold company that we can all be proud of.
You've said before, and this is where I take it to the end here, Jason, you've said before that what's very important to you is to grow the company without relying on shares or issuing equity. Of course, there's a degree of certainty you will need to follow that. You know, you're still true to that statement?
Yes, I think, you know, this acquisition done with no upfront equity demonstrates, you know, our conviction on this matter as owners of the company. Our view is that we, yes, want to grow the company, but by doing it in a way that limits dilution, creates higher value per share as we grow the company. To be clear, you know, equity needs to be part of all companies at different periods of time. It certainly was part of our originating years, and could be part of the future if we make a larger step in the future, but for this transaction, and we will always consider it as owners, the best way to do it would be to limit dilution, particularly to our existing shareholders. Not only does it create more wealth for them, but it sends a signal to shareholders that are considering Orla as an investment, just how we are going to be stewards of their equity.
Have to leave it there. Well, thanks very much indeed, Orla Mining CEO Jason Simpson. Pleasure talking to you.
Thank you very much, Devin.